Hey everyone, welcome back to the channel. If you're a trader who's ever stared at your chart wondering, is this the right time to enter or exit? But what if there was a tool that could help spot those critical turning points in the market? Stick around, because today I'm breaking it down step by step. First off, let's talk about what this indicator actually is. In simple terms, it's a tool that helps identify when the market's momentum is shifting direction, like from bullish to bearish or vice versa. It solves a big problem for traders, figuring out those key levels where price might bounce or reverse, making it easier to time your entries and exits. It cuts through the noise, highlighting potential support and resistance zones based on real market behavior, without a ton of lag. It's especially handy if you're into trend trading or looking for pullback opportunities. Now, how do you add this indicator to your chart? Start by opening up TradingView and pulling up any chart. At the top of the screen, click on the Indicators button. In the search bar that pops up, type in Market Shift Levels, Chart Prime. It should come right up since it's a popular one from Chart Prime. Just click on it to add it to your chart. Boom, it's loaded. Next, let's set it up properly. Once it's added, click the gear icon next to the indicator's name in your chart's legend to open the settings. The defaults are pretty solid for most users, but here's what you can tweak. In simple terms, length controls the period, number of bars, used for the underlying Hull moving averages that detect those momentum shifts. It basically sets how sensitive or smooth the indicator is to price changes. Default is 55. Swing trading, try 70 to 100 for smoother levels. Scalping, try 20 to 35 for quicker shifts. There's an option to switch between showing volume labels or just price levels when price interacts with the key zones. I recommend starting with volume labels on, as they give extra insight into strength. The volume calculation uses a 3-bar cluster by default, which groups recent bars to show average volume at retests. No need to change that unless you're advanced. For time frames, this works great on higher ones, like the 1 hour or 4 hour for spotting overall trends, but drop down to 15-minute or 5-minute for precise entries. Avoid super low time frames like 1 minute to dodge noise. Hit OK and you're set. Key features. At its core, it uses 2 smoothed Hull moving averages. Think of them as fast, lag-free trend lines that track price momentum. When these 2 lines cross over each other, it signals a potential shift in the market's direction. For a bullish shift, it'll draw a dashed horizontal line at the low point of that crossover candle. That's your new support level. For a bearish shift, it plots at the high of the candle as resistance. These are called market shift levels, easy to see zones where price often reacts. You'll also notice labels popping up when price wicks into these levels, showing volume from a quick 3-bar average or the price itself if you toggled that. Plus, the candles get colored. Green if price is above the level, bullish vibe. Red if below, bearish, to give you a quick visual read on the trend. How to trade with it. Let's start with long entries. First rule, wait for a bullish shift. That's when the indicator plots a new dashed line at a low after an HMA crossover. Then, look for a pullback where price retests that level. If you see a wick touching the line but the candle closes strong above it, especially with a volume spike on the label, higher than average, that's your green light to enter long. For stop loss, place it just below the MSL to protect against a breakdown. Take profit, aim for the next resistance level on your chart. I hope this gives you a solid edge in spotting those market shifts. If you found this helpful, smash that like button and subscribe for more practical trading tips. See you in the next video.